Morning, everyone. Uh, Good morning. So, last session we had started off with Ind AS 101, uh, first time adoption of Ind AS. So, on that front, we had seen the reason why this standard was required. And we saw definitions like what do you mean by first set of Ind AS financial statements. Then we saw the meaning of transition date. Then we concluded that this is a change in accounting policy, so you have to do a retrospective restatement. And then we moved on to certain specific items where there is a guidance that is available. So basically, whenever you transit from the previous gap regime to Ind AS, there will be four sets of adjustments. The first one is to recognize something in Ind AS which was not there earlier. The second step could be to de-recognize something in Ind AS, which was there earlier in accounting standards. The third one is reclassification adjustments. And the fourth one is any remeasurement adjustments. So these four things are what will be there in your Ind AS transition process. And then we saw certain specific cases. We started off with ESOPs. So options which are vested and exercised, obviously there won't be a stock options outstanding account. So you will not have any transition impact. Options vested but not yet exercised. So there is no further employee benefit expense that hits your P&L. So the standard gives you a transition guidance, which is voluntary, that you can take the existing gap value and transit into the Ind AS. Otherwise, you have to take the fair value on the grant date, do the transition adjustments, and then transit into Ind AS. In the case of options which are not even vested, it's mandatory that you do the fair value at grant date calculation, restate the stock options outstanding account, rename it as SBP reserve, and then do the transition into Ind AS. So these are the items that we have to be taken care of when we do our ESOP transitions. Then we came on to foreign exchange. So we had para 46, 46A under AS11. So AS11 basically gave you two options. First option, you can take the forex fluctuations directly to your P&L. Or the second option is an irrevocable choice. That is, if it is a foreign currency general loan that you have taken, then you can accumulate the forex differences in foreign currency monetary item translation differences account, FCMITD account. Or if it is for a depreciable asset, you can accumulate this in the cost of the asset and depreciate over the life of the asset. In the former case, the accumulated FCMITD account would be expensed out or amortized over the tenure of the loan. So this was the option available under AS11. Ind AS 21 does not give you the second option. Ind AS 21 only gives you the first method, that is taking it to the P&L. So when you are transitioning from AS to Ind AS, it is possible that I have some foreign currency borrowings which are taken for a capital asset. Some cases, there are some borrowings which is where you have opted for the FCMI TD account. So what the standard tells us, if you are following option one, that is the recognition of forex gain loss in the P&L, option one will continue into the Ind AS. That means you don't have to do anything. It will just transit into Ind AS as a normal item. You cannot move from option one to option two in Ind AS because option two है ही नहीं Ind AS में. Achha, if I have taken the irrevocable choice of FCMI TD account, or if I have taken the irrevocable choice of capitalizing in my cost of asset, then what you are going to do is, then you are going to have two options. First option, continue as it is into the Ind AS regime. You have this particular transition exemption where you can continue to recognize these items in the FCMI TD account or the asset as long as the asset or the loan continues. Once it is closed, the adjustments get closed and automatically you will then transit into Ind AS 21 fully for borrowings after the transition date. Coming to the, so this is the first option. Option two, you have availed the irrevocable choice. You continue that. Or secondly, what you can do, option 2 you can avail, and you can come to option 1 thereafter. Now, when we come to property, plant, equipment, intangible assets, or investment in subsidiary, associate, joint ventures, these are items which are typically held in your, at cost. Okay, so the standard gives you two options. One is follow the deemed cost method. Deemed cost method means whatever is your previous cap carrying value, take it, or you can take the fair value on the date of transition. Be mindful that this fair value is not the revaluation. So this adjustment goes to your retained earnings because this is only the starting point for your Ind AS. Or alternatively, you can follow Ind AS retrospectively, right from the beginning of the time you had this Ind AS in force. You would follow that, arrive at the value on the transition date, and then take that value, the carrying amount, difference between that would go to your retained earnings. So that is your full-fledged convergence adoption. Okay, so that is done. Then we moved on to business combinations, where we saw that business combination is a very different concept under Ind AS as compared to your AS. AS had AS 14 and AS 21 that dealt with consolidation. But your business combination has a wider scope. Business combination, the very definition of control, which is there under Ind AS 110, has nothing to do with the percentage of shareholding, whereas AS 21 requires the shareholding to be more than 50%. So here, nothing to do with shareholding, even if you have potential shares and have a substantive right to convert it, then you are the entity who is having control over the entity. Okay, so now when we look at business combinations, there could be multiple this is obviously in the consolidated financial statements. When you have your business combinations, uh, which involves taking over of an entity's share capital, then there would be multiple such transactions. So in such a scenario, what the standard tells is you can either opt for a retrospective restatement. What do you mean by retrospective? Go back in time when the acquisition happened, determine the fair value of net assets acquired, fair value of purchase consideration to arrive at your fair value of net assets, fair value of purchase consideration to arrive at your goodwill. And that is those are the amounts that you will take at the time of transitioning into Ind AS. Okay. So, but this becomes a very cumbersome task because you may have multiple acquisitions. You have to go back in time for all those acquisitions and arrive at these figures. So, what the standard has given is the standard has said you can take a choice to select from which date you will do the restatement. So for example, if you're transitioning on 1st April 2023, you can say all consolidations up to 1/4/2020, I will not restate. From 1/4/2020, I will do the restatement. Why? You can have this choice. You can have this choice. What is the implication of this choice? Up to 1/4/2020, jo kuch bhi hai, you will not do the restatement. From 1/4/2020 onwards, you will do the restatement for all the acquisitions happening post 1/4/2020. So this is the advantage. You can, moderate the number of restatements that you have to do. The easiest job, obviously, is that the date of transition will be the date of restatement, in which case all the subsidiaries will be accounted at the fair value of net assets, fair value of PC, etc. Everything gets computed on the date of transition, and then you transition into Ind AS. Are we okay with this? Yes, any doubts so far? No doubts? Okay. So when we talk about retrospective restatement, this specifically means you have to restate your non-controlling interest, you have to restate your assets, restate your liabilities, restate the purchase consideration, ultimately resulting in a restatement of goodwill. So now, under your AS, for example, minority interest could never be negative. But under your Ind AS, NCI, which is what we call minority interest as, these will can definitely become negative, So when we talk about restatement, what happens is we have to see what is the date that I have availed for the purposes of transition. If I have availed a date and after that there is an acquisition, you mandatorily have to do a restatement for NCI as well. So restatement of NCI depends on restatement choice of business combination. So that is your fundamental point. Okay, so we have seen the business combination adjustment. Okay, so now we shall run through some questions. Okay. Okay. Ind AS requires illustration 4. Ind AS requires allocation of losses to the NCI. You are well aware of this, which may ultimately lead to a debit balance in NCI. It is quite possible. Even if there is no contract with the non-controlling interest holders to contribute assets to the company to fund the losses. Whether this adjustment is required to be made retrospectively. So this whole whether it is required to be made retrospectively, I can answer this question only depending on when is my business combination restated. When is my business combination restated? So NCI restatement depends on choice of restatement for business combination. If past business combinations are restated, NCI has to be restated. If you are not restating, then your NCI also cannot be restated. Are we able to understand this? Yes? Are we able to follow? All right. Acha. Okay. All right. Perfect. So then let us move on to the next one. So that takes care of illustration 4. Coming to the next one. Okay. Okay. A Limited had made certain investments in B Limited's convertible debt instruments. Okay. The conversion rights are substantive and would provide A Limited with a control over B Limited. This is something that you have already studied. A has evaluated that B would be regarded as its subsidiary under Ind AS and hence would require consolidation in its Ind AS console financial statements. Okay. So now B Limited was not considered as a subsidiary, associate, or joint venture under the previous cap. How should B Limited be consolidated on transition to Ind AS, assuming that A has opted to avail exemption from retrospective restatement of past business combinations? Tell me. You need not look at this answer, but you can just tell me. Okay. Bolo, tell me. So I am having a company B Limited. पहले suppose there was a company C Limited and now there is A Limited. C Limited held equity share capital, whereas A Limited has convertible debentures. Okay, convertible debentures. So earlier gap, only C was consolidating B. Why? Because C held the equity shares of B, so only it could consolidate. Now, under Ind AS, we look at substantive rights. Who is actually the true controller of the business of B Limited? It is A. So, abhi tak was A consolidating B under AS? Bolo yaar.
Yes, sir.
It was not consolidating. A was not consolidating B. C was consolidating B. Now, going forward in Ind AS, should A consolidate B?
Yes,
Answer
sir.
is yes. Answer is yes. So if A should consolidate B, then I need to apply the six-step model of accounting for Ind AS 103. You people would be aware of the six-step model. Okay. All right. You may not have been given the steps, but you would know that, you are identifying the acquirer and the target. Then you are moving on to identify the net assets. uh, and measurement of NCI, whatever is the method, proportionate net assets or NCI at fair value. And then you come on to your goodwill as the final step. So all in all, it's a 6-step model. So therefore, when we talk about Ind AS 103, A is required to consolidate B. Now, how should B Limited be consolidated on transition to Ind AS? So obviously, if the option of retrospective restatement is not availed, then I have to do the retrospective restatement. Okay. So I will have to go back in time, look at when A has actually made investment in convertible debentures of B, and from that date, I will find out the fair value of NCI, fair value of purchase consideration, find out the goodwill, and then bring that into the current status. However, if I take the exemption from retrospective restatement, then I can say that I will restate only from the date of transition, in which case, the position of B Limited, net assets, PCI, goodwill, all of this will be taken as on the date of transition. Are we able to understand? Bolo yaar.
Sir, yes, sir.
All right. So that takes care of illustration. Fine. All right. Now we move on to the next one, and this is slightly important. Okay. A Limited has a subsidiary, B Limited. On first time adoption of Ind AS by B Limited, that means by the subsidiary. Okay. It availed the optional exemption of not restating its past business combinations. Okay. However, A Limited, in its consolidated financial statements, has decided to restate all the past business combinations. Whether amounts recorded by subsidiary need to be adjusted while preparing the consolidated financial statements of A Limited, considering that A does not avail the business combination adjustment. Will the answer be different? Will the answer be different? If A adopts Ind AS after B. If A adopts Ind AS after B. Okay. So, यहाँ पे situation is something like this. This is illustration 6. Okay. I have a company A Limited. A Limited is having investment in B Limited. B Limited is further having its own subsidiaries. Okay, let us say S1, S2, or we can do one thing. We will put in some more subsidiaries for A.
सर
S1.
पेरेंट के अकॉर्डिंग करना पड़ेगा ना, अगर आपने बोला था कि स्टैंड अलोन फाइनेंशियल्स में कुछ भी कर सकता है, बट जब कंसोलिडेट बनाएंगे एक के साथ तो एक के अकॉर्डिंग उसको।
हाँ, दैट्स व्हाट जो आपने कहा वो सत्य वचन है. ओके, वही होगा यहाँ पे. ओके, बट they have put in one more question towards the end. What is to be done if B has adopted Ind AS first and after that A has adopted? Okay, so we will look at both the factors. So in the first case, see, A is having B Limited as one of its subsidiaries, S1, S2 as the other. Okay. B has its own subsidiaries, S2, S3, and S4. Now, A has not availed restatement. No restatement exemption. Correct? No restatement exemption, right? Has decided to restate all its past business combination. No restate, so therefore restate all business combination. Correct? ये ए कर रहा है. बी ने क्या किया? अवेल रीस्टेटमेंट exemption. Avail restatement exemption. Therefore, no restatement of business combination. Effective from date of transition. So it will do the consolidation effective from date of transition. Are we able to understand this? Yes? बोलो यार. Everyone, are we able to follow? Yeah. Monica, Usha, Jeannie, Manish. Yeah. Okay. So now, can B do this by itself? Answer is yes. B अपने आप कर सकता है. So B's consolidated financial statements permitted. But when I'm doing A's consolidated financial statements, can I do what B is continuing to do? Answer is no. Answer is no. Business combination exemption availed by B Limited cannot continue in A Limited's consolidated financial statements. Are we able to understand this? Yes. So therefore, what should B do? B should restate all business combinations. B should restate all business combinations. अरे समझ में आ गया अपने को? Yes,
यस
everyone. Jeannie समझा?
Yes, sir.
All right. Usha, Manish, hope you guys are there. Hope you have understood. Okay. All right. Now, now they have asked another question. Will the answer be different if A adopts Ind AS after B Limited? If A adopts Ind AS after B. अच्छा. ऐसा हो सकता है क्या that parent can adopt after the subsidiary?
सर, डेट ऑफ एक्विजिशन अगर डिफरेंट है तो हो सकता है.
Yes. So यहाँ पे there is an exception. यहाँ पे there is an exception. I hope you guys are noting this. Okay. Exception to above. A moves to Ind AS after B. This can happen only if possible, only if A acquires control of B after B transition to Ind AS. Okay. A acquires control of B after B transition to Ind AS. So now the question is, if Ind AS in all other cases, B को Ind AS लग गया, that means A also has to follow Ind AS. There is no second thought about it. But in only this one condition, it is possible that A will move into Ind AS after B has transition. So in this case, tell me one thing. Is retrospective restatement for B Limited required? Is retrospective restatement of B required if A is doing retrospective restatement? बोलो यार.
यस सर.
Yes. Jeannie?
Yes, sir. A को भी करना पड़ेगा.
अच्छा. पहला सिनेरियो. A was already having control over B. B transition to Ind AS. Automatically A transitions to Ind AS at the same time. Now suppose कीजिए B transition to Ind AS in 2018. A has acquired control of B in 2024 after 6 years. Now, until A acquired control, B was following that exemption. B was following that exemption that was available for business combination. ठीक है. Now, when A is acquiring a control over B, when A is acquiring a control over B, A wants to go for retrospective restatement. Put yourself in B Limited's shoes and think, do I
नो
really have to do a restatement?
नो सर, अब जरूरत नहीं है क्योंकि टाइम गैप काफी ज्यादा है, 6 इयर्स का।
वो टाइम
तो
गैप भले ही आप उसको 6 years मत करो, 1 ही साल करो. Time gap is having no relevance here. Basically, the point is when B moved into Indies, उसके सर पे किसी का साया नहीं था. It did not have anybody's control over it. So B was independent to make this choice of availing the exemption. Now, after the transition, if somebody else acquires, then that somebody else who is acquiring has to accept you as it is. Okay?
यस सर, यस
Has
सर,
to accept you as it is. You cannot put your conditions on them. It's much like a marriage, right? You have to accept the subsidiary as it is. You have to accept. भाई तू जो कर रहा है तू कर. Whatever you are following, please follow. I'm going to do this. You can continue to do this, but going forward, you have to do what I tell you. Are you able to follow? So going forward, any transition that happens, any acquisition that happens, that is what will happen in line with what A tells. But on the date of transition, A cannot force B to do a restatement because when B availed the exemption, A was not in the picture at all. Okay, so this is the only exception that is there. This is the only exception that is there. Retrospective restatement. Okay, so therefore, B can continue to avail exemption as it was not under A's control while making the choice of availing the exemption. Are we able to understand this? Yes.
यस सर।
समझ में आ गया? Very good. Very good. So that takes care of this. Now, let us move on to the next one. Okay, so this is done. Question 1. Company A intends to restate its past business combination with effect from 30th June 2080. Sir, ये कौन सा date है? This is any date prior to the transition date. If business combinations are restated, whether other exemptions such as deemed cost exemption for property, plant and equipment can be adopted. Yes. Question समझे आप? Did you guys understand the question? So I have A Limited consolidated financials. Just drawing a simple T form balance sheet for our understanding. Okay. So property, plant, equipment, इसमें add होगा A and B. Then I'm having current assets A, B. Okay. Then I'm having here current liabilities A, B. Non-current liabilities A and B. Equity share capital. This is of obviously A. Retained earnings. Acha. And because this is a business combination, एक goodwill भी आएगा. Let us just think about this. Okay, this is your A Limited's consolidated financial statements. Now, if business combinations are restated, acha, A Limited consolidated financial statements में it is availing the option of restatement. It is availing the option of restatement. Okay, तो ये तो हो गया pre-transition. Now I am moving to transition. Okay, so A Limited consolidated financial statements after transition. Now here, if I go in for the transition, tell me one thing. If I go in for a transition, say property, plant, equipment, A will be as it is. Do I have to bring B Limited's property, plant, equipment at fair value? Yes. बोलो यार. If I am having B Limited as my subsidiary and I am going for the restatement of business combinations, do I have to recognize B Limited's property, plant, and equipment at fair value? Monica?
सर आई थिंक माइट बी, मतलब मेरा आंसर रॉन्ग हो सकता है, इसलिए मैं
वो
चुप हूँ.
ठीक है, वो ठीक है. आई एम नॉट वरीड अबाउट दैट.
सर नहीं ले सकता.
अच्छा. ओके. एक्चुअली ले सकता है बिकॉज यू आर अवेलिंग द रीस्टेटमेंट. यू वांट टू डू द रेट्रोस्पेक्टिव रीस्टेटमेंट, तो आपको यू हैव टू गो बैक इन टाइम and then do the restatement of B Limited's property, plant and equipment. Now, why you did not say nahi kar sakta probably is because I may be wrong, but I think you are saying, sir, there is a deemed cost exemption that is there when I'm transitioning from previous gap to Ind AS. So under this, we are having, say, a deemed cost exemption. Deemed cost exemption, what does it tell? Whatever is the previous gap carrying value, I will bring it exactly hoo-ba-hoo into your uh, uh, Ind AS. Deemed
यस
cost
सर.
exemption is there. So deemed cost exemption is there. In spite of that, can you do a restatement? So again, it ends up becoming a conflict. Right? Now, you have studied Ind AS 103. Tell me one thing. Can I recognize contingent consideration in my financial statements? Come on. Contingent
Yes,
consideration.
sir.
Yes, you can recognize. Was it recognized under AS 21?
No.
No. In process research and development, was it recognized under accounting standards?
नो सर.
No, sir.
Will it be recognized in Ind AS 103?
Yes.
Obviously, yes. होगा वो. Why will it be there? Because see, suppose you are acquiring a company that is into R&D. Okay. Now you have this deep stake or whatever is coming, right? and say ChatGPT, for example, what do you think? Their value is only that AI software that is there, or is it the countless number of man hours that they have put in to arrive at that particular tool? Hmm?
Both.
It cannot be just the value of that software. Today, that software, you get it, say, for $2,000. Okay. It's not their value. Their value is their ability to generate that software. The ability to generate that software was not recognized under AS 26 because it was amounting to being an internally generated intangible. Yes or no? उस टाइम पे it was an internally generated intangible asset. That is why you were not recognizing it as an asset under AS 26. But when I'm acquiring such a company, I'm not acquiring it only for getting that software. I am acquiring it for the purposes of getting that expertise, that intellectual property, a claim over the human resources who were able to generate such a tool. And therefore, it becomes an in process research and development cost, which I will recognize in business combination. Again, Ind AS 38 does not allow it, but business combination allows it. Why? Because that is the reason why you have acquired. The whole purpose behind a business combination accounting is that your purchase consideration should exactly reflect, give a true reflection of what you have purchased. You pay $1,000 for buying a company, and the net assets of it is only, let us say, $150. So that means, do you mean to say you have paid $850 extra? You have more money. If you have more money and you are paying, then why are we recognizing goodwill? So the whole objective is to recognize as much assets
For
and
avoid
yes, and as much fair value of liabilities as you can, so that the value of goodwill, which is a balancing figure, gets minimized. That is what is the intention of business combination. Business combination is not meant to identify goodwill. Business combination, goodwill is there in its place, no doubt about it. But the whole purpose of business combination is to reduce that value as much as possible. To reduce that value as much as possible. You would even have studied further, this goodwill is not an amortizable goodwill. This can only be tested for impairment. You cannot take it and amortize it over 5 years or 10 years. That means something that you have excess paid will continue to be there lifelong in your balance sheet as goodwill. Yes or no? Suppose your subsidiary goes on making profit, this goodwill will continue as it is. Uska impairment hoga nahi. So do you want to show that goodwill? It becomes difficult to explain that goodwill in the future. Why did I pay excess? So that is why there is a restatement option that is available in your a restatement mandate that is there in Ind AS 103, where you bring in all identified assets at fair value as well as unidentified assets at fair value. And then you do the business combination. So here, though there appears to be a conflict, the standards exemption should be viewed as deemed cost exemption will continue for this avail. Deemed cost exemption. Avail deemed cost exemption here. And in this case, you can avoid the deemed cost exemption. Are we able to understand this?
Yes, sir.
Yes? All right. Perfect. Monica, समझ में आ गया?
yes, sir.
Yes. Pooja, did you follow? All right.
Yes, sir.
ठीक है. So that takes care of this part. Okay. तो देखो,
सर
most of these
सर
questions. हाँ, बोलिए.
सर सर इसको हम चाहे, अगर रीस्टेट नहीं लिखा हुआ होता तो हम इसको फिर हम ले सकते थे ना कि इसको डीम्ड कॉस्ट पे ही लेना चाहिए।
अगर restatement नहीं होगा, then also on the date of transition you have to do the restatement. Yes.
ओके, डीम्ड कॉस्ट पे नहीं लेना है, राइट?
डीम कॉस्ट पे नहीं ले सकते आप. You have to go
ओके
because ये business combination है. Okay.
ओके ओके
It's a
सर।
business combination. You have to do the restatement. If not retrospective on the date of transition, तो आपको करना ही पड़ेगा. Okay. All right. So we are not conflicting, but we are doing a harmonious interpretation. Okay. So that takes care of this particular requirement. Okay. So that is. Let us then look at what other question is there. We are toggling a lot between the questions, but that is how the questions are placed and that is how the explanation has gone. Okay. So when you revise, please be careful. Okay. All right. A Limited acquired B Limited in a business combination transaction. A agreed to pay certain contingent consideration classified as a liability to B Limited. As part of its investment in the separate financial statements, A Limited did not recognize the said contingent consideration since it was not considered probable. A Limited considered the previous gap carrying value amounts of investment as the deemed cost on first time adoption. In that case, does the carrying amount of investment need to be adjusted for the transaction? Should it be adjusted for the transaction? Very simple. There are two things here. One is investment, other is contingent consideration. Tell me one thing. When you are doing your Ind AS 103, contingent consideration you would have studied. Do you show contingent consideration as a reduction from purchase, as a reduction from cost of investment, or do you show it separately?
So can you repeat your question?
In Ind AS 103, contingent consideration. See, today I have made an investment in your subsidiary and I promise to make further investment if certain conditions are fulfilled. If certain conditions are fulfilled. So now my question is, your investment in the subsidiary, say 100 rupees, and the value of this consideration, say 5 rupees, which is contingent. Do you show your investment at 105 or will you show it as 100 rupees towards investment? 5 rupees separately you will show as contingent consideration. क्या करके दिखाओगे आप?
Separately.
You will show it separately. You will show it separately. In your Ind AS 103, contingent consideration payable will be a separate line item. It will not be clubbed with your purchase consideration. Are we able to understand this? Yes. It's forming part of your PC working as a separate additional line item. Did you understand? Yes. And therefore, now tell me one thing. Is this contingent consideration recognized under accounting standards?
नो सर।
No.
No.
वो दिया भी है यहाँ पे कि it was not recognized because it was not probable. And in all likelihood, contingent considerations will never be accounted under accounting standards. There is no basis for us to recognize that under accounting standards. So now what it is saying, does the carrying amount need adjustment? Answer is no. Carrying amount should continue at cost. You introduce a new line item called contingent consideration. Okay. Carrying value of investments are not adjusted. Any adjustment in relation to contingent consideration shall be made in the statement of profit and loss. Do not adjust the value of investment. You will adjust it in the P&L. Or in this case, since it is on transition, it goes into your retained earnings. Are we able to understand? Yes?
यस।
Yes, sir.
Okay, so that takes care of illustration 14. That takes care of illustration 14. Okay. All right. Fine. So 8 is done. Yes. Now, let us come to the next part. Something that you have very recently studied. कौन सा पढ़ा था आपने very recently?
First time adoption.
वो तो यार कल का है, मेरे से पहले. फाइनेंशियल इंस्ट्रूमेंट्स.
Sexual framework.
जेवी और
अच्छा जेवी. अच्छा 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 ओके. जेवी वाला भी आएगा बेटा. सब सब याद कराएंगे. कौन कौन सी चीजें याद होंगे भी नहीं वो भी आएगा इंडेक्स 101 में. ओके. सो कंपाउंड फाइनेंशियल इंस्ट्रूमेंट्स यू पीपल हैव स्टडीड. यस. यू
Yes,
पीपल
sir.
हैव हर्ड. अभी ऐसे पूछना पड़ेगा कभी सुना है इसका. यस. सो सीएफआई इज समथिंग यू हैव ऑलरेडी स्टडीड. एग्जाम्पल कन्वर्टेबल डिबेंचर्स. नाउ what we used to do, account for liability and equity separately. Correct? We would have a liability component, we would have an equity component. Acha. So what do? I have this compound financial instruments in my capital structure pre-transition. So tell me one thing, accounting standards mein, how did you show this convertible debenture? How did you account for convertible debentures in
So
accounting?
convertible debentures are shown as non-current liabilities.
That's right. They are shown as non-current liabilities. And सीधा whatever is the coupon rate on that you used to charge the interest. And then you would, when the conversion would happen, debentures would get debited, share capital would get credited. If redemption was exercised, obviously debentures would get debited and cash bank would get credited. The road was very easy under accounting standards. Now that is slightly complicated under Ind AS. Okay. So now we will do this with the help of a simple example. Then you will only tell what should be the transition value that needs to be taken. Okay. So let us take an example. Okay. Face value 10,000. Coupon 7%. Market rate of similar non-convertible bond 10%, optionally convertible. This is at the behest of the holder. 5 years term. Okay. Now, previous gap value. Gap value. You have shown it as what all of you said was right. Bank account debit 10,000 to convertible bonds 10,000. Bank account debit to convertible bonds 10,000. This was what was recognized under earlier regime. Now, now, date of transition. 2 years after bond issue. 2 years after bond issue. Okay. So bond issue हो गया, उसके 2 साल बाद you are transitioning into Ind AS. Now tell me one thing. Can you find me the equity component and the liability component of this particular instrument? Yes. Every year you will pay 7% interest into present value annuity factor 10% for 5 years. Six two zero nine. End of the 5th year. Do you remember this calculation?
Yes.
Yes, sir.
8863 would be the fair value of your liability. Therefore, equity component $1,137. Did you understand?
Yes, sir.
Acha. Tell me one thing now. This value 88631137, is this the value at the time of issuance of the bond, or is it the value on the date of transition?
Issue.
At the time of issue of the bond. When is the transition happening?
2 years after the issue.
2 years after the issue. So very simple bolo. Will
Unwind.
the value of the liability remain as 8,863 or will it change after 2 years?
Change
Change.
after 2 years.
It will change after 2 years. तो अभी सीधा सीधा जवाब दे दो. Will you take that value after 2 years or will you take this value?
That value.
That value.
Changed.
You will take whatever that value comes after 2 years. इसका मतलब you have to prepare an amortization table. Yes?
Yes, sir.
2 साल के लिए. Okay, so now liability component at amortized cost. Year 1, 2. Opening 8863. Effective interest rate 10%, 886. Coupon 7%, 700. So closing value is 9049. Are you able to understand this?
Yes, sir.
Yes, sir.
So opening 9049, EIR 905, 700. So 9,250. Okay. अच्छा. In both these years, equity component में कोई change होगा?
No.
Sir.
No change. Yes. Continues at 1,137. Okay. So now you are having a bond which is recognized at 10,000. Correct? Yes.
Yes,
Yes,
sir.
sir.
Now I have to recognize that bond at which value?
9,254.
Plus
With equity.
1137.
plus 1137. So transition date पे entry on date of transition. What are you going to pass? I have to de-recognize 10,000. Convertible bond debit 10,000. Okay. 2. Liability component 9,254. 2. Equity component 1,137. So what is this difference? 391. Where will this difference go?
PN
retained earning.
earning.
Retained earnings. P&L जाएगा नहीं because this is on transition. Transition पे you cannot say I made a loss or profit. It goes to retained earnings. Okay? All right. Can somebody tell me why this gap of 391 is coming? Why gap of 391?
Sir, discounting or the rate of difference in the discounting rate or coupon rate.
Yes. Under Ind AS, first year, your interest was 886. Correct?
Yes, sir.
आपने कितना अकाउंट किया? 700. क्यों? Because I follow substance. I follow legal form of accounting. Second year, your interest is 905. You again booked 700. So what is this total? 1791, 1400. दोनों का डिफरेंस देखोगे 391. Yes.
Yes, sir.
So this is nothing but additional cost in Ind AS. Hence adjusted in retained earnings. Hence adjusted in retained earnings. Are you able to follow?
Yes.
Yes, sir.
Are you able to understand? कोई दिक्कत है अभी तक? Yes?
No, sir.
नहीं
No.
है ना? Not there. Okay. So what we need to do is we need to do a transition with effect from the initial date, but arriving at the value as on the date of transition. Arriving at the value as on the date of transition. Are you able to understand? Yeah. So you will essentially do the split accounting. You will essentially do the split account. Okay. Let us come on to illustration 15. Okay. On 1st April 20x1, Sigma Limited issued 30,000 6% convertible debentures, face value 100 per debenture at par. These are redeemable at a premium of 10% on 31st March X5. So tenure is 4 years. Or these may be converted into ordinary shares at the option of the holder. Interest rate for equivalent debentures without conversion rights is 10%. The date of transition to Ind AS is 1st April 20x3, and 2 years later. Suggest how should Sigma account for this CFI on the date of transition. Present value of 1 rupee receivable at the end of each year based on discount rates of 6 and 10% are given below. Okay. Right. So now, let us work out. Can we try this? Yes.
Yes, sir.
इसमें कुछ difficult नहीं है. Whatever I did just now, it's exactly the same. Only difference is what? Figures. Only difference is figures. Okay. And of course, the fact that you have accounted, you are having a redemption that is happening at a premium. This is the only thing that is there. Okay. All right. Now, under accounting standards, when I'm having an investment or I have issued a liability at say 10,000 rupees, and I have said I will do a redemption at 12,000 rupees and tenure is say 4 years. So tell me one thing, will you take 10 to 12, the difference of 2,000 extra that you are paying, will you take that hit entirely in the 4th year? See, I have a bond. Bond face value 10,000. Redemption value 12,000. Tenure is 4 years. Tell me, under accounting standards, how are you going to account for this bond? First of all, bank account debit 10,000 to bond. Are you okay with this?
Yes, sir.
Acha. This is the first year initially. At the end of first year, will there be a redemption component that you will account for as a cost?
No,
Sir,
sir.
Yes, sir.
redemption
Oh,
reserve created.
Sir,
redemption
sometimes
is
reserves, हाँ,
Mhm.
डिबेंचर रिडेम्पशन रिजर्व्स या फिर कुछ ऐसे अकाउंट से हम लोग इसको
बट
सेटल
वो
आउट
डिबेंचर रिडेम्पशन रिजर्व का सोर्स क्या है?
सर पीएनएल ऑफ कोर्स
Ultimately, bhai, the source is P&L only now.
यस सर
You can give debenture redemption reserve, debenture sinking fund, उसके लिए sinking fund investment बनाओगे, you will do everything, but the source of that is your P&L, right? So therefore, I will not take a hit of 2,000 entirely in the last year because this 2,000 is a cost for 4 years. So every year I will take a hit of
500.
500 rupees every year. I will take a hit. Okay. So there, first year I start with 10,000. At the end of first year, with the hit, it becomes 10,500. Then 11,000. 11,500 and ultimately it stops at 12,000. Ultimately it stops at 12,000. Okay. Are you able to follow?
यस सर
Yes.
This is what we were doing in accounting. Very simple in the previous regime. In Ind AS, what we do, I have already explained. What we do is already explained. So now if I have to look at the conversion at the time of transition after 2 years, this is going to be the value of the bond as per ICAP regime. And 11,000 will be compared with the Ind AS value for the purposes of posting the transition end. Are we okay with this? Yes?
Yes, sir.
यस सर
Sir.
All right. So now let us start the working. Okay. So first thing, issue proceeds 30,000 debentures at 100 per debenture. So that comes to 30 lakh. Yes. And when has this happened? 1st April X1. Are we okay? This will be split between liability component and equity component. Liability component and equity component. Yes. Now, when I talk about my liability component, come on, you should be well versed in this. 30,000, 6% convertible debentures. Coupon rate is 6%. So every year, इसका interest कितना होगा? 1,80,000. Correct? So present value is equal to 1,80,000 is your interest and that interest will be multiplied by present value annuity factor of 10% for 4 years. Are we able to understand?
Yes, sir.
Yes, sir.
So 10% for 4 years, total is 3.17 into 3.17. And at the end, you are going to get a redemption. Redemption amount is 33 lakhs, 10% premium multiplied by discounting factor 0.68. Present value factor 10% fourth year, 0.68. So that comes to how much?
28, 14, 600.
28, 14, 600. All right. So the difference is
Equity component.
equity component. Perfect. You guys are brilliant. Okay. All right. Okay. So then we move on to the next one. Can I straight away take 28 lakh 14,600 as the value of my liability and close? Answer is no. This is the liability value at the initial recognition. I have to bring it to the date of transition, which is happening after how many years? It is
2 years.
happening after 2 years. So therefore, मुझे वो working करना पड़ेगा.
Amortized table बनाने पड़ेगा.
Yes. Year 1, 2. Opening 28, 14, 600, 29, 16. Sorry, not 29. Interest EIR 10%. 28, 281, 460. Coupon 6% के हिसाब से 30 lakhs into 6% is 180. So closing principal repayment is a bullet repayment. So this comes to 29, 16, 0.
60.
So 291, 606. So this comes to how much?
30, 27, 666.
Yes, 30, 27, 666. Equity component, koi change?
No.
It will remain at 1,85,400. No. Convertible debentures debit कितने पे होगा?
3027 sorry पूरा
So
30,000.
3160.
30 lakhs.
30 lakhs or something else.
सर इंटरेस्ट एक्यूमुलेशन भी होगा उनका
कितने साल का?
2
2
साल
years
का.
का sir.
2 years. Interest accumulation in the sense the redemption accumulation, right?
Yes,
So
sir.
30 lakhs is becoming 33 lakhs after 4 years.
31,50,000.
31 lakh 50,000. That's right. So 31 lakh 50,000 debit to liability component. कितना है?
3027,666.
3027 666. Equity component
185,400.
85,400. So what will be this difference?
Retained earning.
हाँ, retained earnings. Value कितना है?
63,066.
63,066. Okay. Now, how do we derive this difference?
Interest and premium portion.
Yes. Ind AS. In Ind AS year 1, I have booked an interest of 281,460. Year 2, interest is booked of 291,606. Under accounting standards, I have booked interest of 1,80,000 plus 3 lakh is for 4 years. So 75,000 for 1 year. So that comes to how much? 2,55,000. है कि नहीं? So 281,460 minus 2,55,000 difference is बोलो यार
31,460.
31,460 and here it comes to
41,460. नहीं 41,606 sorry.
41.
91 minus 55.
Yes.
40.
36,606.
Yes sir.
So this comes to
So फर्स्ट वाला ईयर 1 का डिफरेंस 26,460 है.
Yes sir.
right. 26,
460.
460.
460.
Now total comes to 63,066.
ओके कुछ अलग पढ़ा हमने ये सब में कुछ नहीं जो पढ़े वही किया हमने ओके ऑल राइट सो दैट टेक्स केयर ऑफ दिस पर्टिकुलर क्वेश्चन आल्सो ओके ऑल राइट सेम फिगर्स फाइनेंस कॉस्ट क्लोजिंग बैलेंस 31,50,000 63,066 31,50 everything is the same okay अच्छा it is possible that you people will try out RTPs or suggested answers okay RTPs okay now study material solution is 100% right okay please refer this RTP mein it was erroneously put in as 5 years. The question said 4, solution was done taking it as 5. That is rectified in the study material. So what you do is you please refer to the study mat solution. वो बिल्कुल सही है. Okay? All right. The institute has rectified the error in the study material. So that is done. So illustration 15 is taken care of. All right. ठीक है. Now, where do we go from here? So we have done ESOPs, number 1. Number 2, foreign currency loss or gain. Number 3, PPE, investment in subsidiary, joint ventures, etc. Number 4, business combinations. Number 5, compound financial instruments. These are the 5 adjustments that we have seen. Number 6, something that you studied last. ये पढ़ा है आपने? Investment in joint ventures. Yes?
Yes, sir.
Right sir.
So what do you do when you are doing your investment in joint ventures, JV accounting? I think on Ind AS 28 है ना?
Yes sir.
Yes. What do you do?
Book value accounting.
Book value accounting. You remember this?
Equity
method
sir.
under Ind AS. You have your investment in the joint venture at cost. उसके बाद whatever the joint venture earns as a profit, That proportionate profit you add it to your investment value. And if there is a withdrawal in the form of dividends, you will subtract it from the accumulated balance. Are we able to follow? यही होता था equity method. Yes or
Yes.
no? So, because I don't have sole control over the assets, I only take the portion of profits that has been generated after the acquisition period. And that is how we call it as the equity method. Okay. Now, AS 27. This is Ind AS 28. AS 27. What you used to do?
So कॉस्ट में हम प्रॉफिट शेयर का परसेंटेज ऐड करते थे.
वो यहाँ पे हो रहा है ना, Ind AS 28 में. Ind AS 28, you are having investment in associate plus.
So P&L में उसका शेयर जाता था.
हाँ, so इसका दूसरा इफेक्ट P&L में ही जाएगा ना. So it
Yes.
gets added to the investment in consolidated financials and there it goes and sits in your P&L. तो यही होता है equity method. Can you recollect what you used to do in AS 27? सर हमको इक्विटी का मालूम नहीं. आप कौन से जमाने का क्वेश्चन पूछ रहे हो? AS 27 में we used to do something known as
प्रपोर्शनेट
Cost
करते
of
थे,
fair value.
प्रपोर्शनेट अकाउंटिंग होती थी.
yes,
जो
we used to do something known as proportionate consolidation. AS 27 would tell us you are having a joint control over the assets. In the agreed share, of course. If it is 60-40, you are owning 40% control, they are having 60% control. You will record the assets at 40%. You will record the liabilities at 40%. There you will record the assets at 60% in the counterparty and 60% there. Okay. So let us understand this with the help of an example. Okay. Yeah, this is the story of an airline that just shut down, okay, or merged, okay. So you remember this airlines, Tata Singapore Airlines Limited, okay, which we know by the name of Vistara, okay. So Tata Sons, Singapore Airlines. These were the stakeholders, 51%, 49%, okay. AS 27 में, if it was AS 27, what the standard said was we will do proportionate consolidation. So when I am in the books of Tata Sons, what I would do was property, plant, equipment, Tata Sons plus 51% JV stake. I will add it. Same for liabilities. In the case of Singapore Airlines, 49% would be added. It makes sense for the purpose of accounting. But reality की बात करो, practical. Is it possible? Suppose Tata Singapore Airlines has 25 aircrafts. Okay? 25 में से Tata Sons will say 12 is mine. Singapore Airlines will say 12 is theirs. आप कैसे divide करोगे 25 aircrafts? For simplicity, let us say 50%, 50%. 12-12 तो बट गए. अभी there is one aircraft left in the asset, वो काट के देंगे क्या दोनों को? Yes, कि आप आधा रख लो, आप आधा रख लो. Is it feasible? Can I really apportion my assets like that?
No.
Hypothetically, liability भी आप कर सकते हो. Because one entity will say, I will pay my share of the obligation and then you take care of it. So liabilities to some extent I can still understand. Property, plant, equipment कैसे करोगे? They will be having their own facilities, infrastructure cost. So tomorrow, if Tata Sons exits and Singapore Airlines continues, then will Tata Sons lay a stake on that infrastructure of 50%? Answer is no, it's not possible. It's not possible. So this is not a practical method for doing your consolidation. Nevertheless, it was done using some particular logic at that point of time. But today, Ind AS does not permit it. Ind AS says, look, Tata Airlines, Singapore Airlines, is an independent entity by itself. The treatment of the assets and liabilities of Tata Singapore Airlines Limited is going to be based on the management decisions of Tata SIA Airlines. Tata Sons and Singapore Airlines on a standalone basis cannot decide anything. They will have to come together and make a decision. So in that case, neither Tata Sons has complete control nor Singapore Airlines has complete control. Even if Tata Sons is owning more than 50%, even if Tata Sons is owning more than 50%, Tata cannot make even one single decision without the consent of Singapore Airlines because it is a joint arrangement. It is a joint venture. Okay. A joint venture is basically a joint arrangement created as a separate legal entity. Created as a separate legal entity. So they don't have any stakes here. They don't have any they have only equity stake in this entity. They don't have the freedom to take assets and liabilities the way they want. So that is why if you see today, even after merging with Air India, there are aircrafts which are running with the logo of Vistara. Niche they have put in the insignia of Air India, stating that this airline is operated by Air India. Because under both their decisions, they have merged with Air India. And now they said, okay, we will do the branding in the next couple of months. Until then, we'll continue to use this aircraft. Until then, we will continue to use this aircraft. Okay. So now we do the equity method of accounting. That is why we are now doing the equity method of accounting. But unfortunately, AS में all these assets and liabilities are proportionately considered. So when I'm transitioning from AS to Ind AS, what do you have to do?
इन
What
असेट्स
will
लायबिलिटी को डी-रिकॉग्नाइज करना पड़ेगा.
Yes, whatever you have proportionately consolidated, you will have to de-recognize that. Whatever you have proportionately consolidated, you will have to de-recognize that. अच्छा. Under AS 27, goodwill आता था. Obviously, when you are proportionately consolidating, so assets account debit, proportionate, credit liabilities account, proportionate, credit purchase consideration, proportionate. There will be a difference. That difference ends up becoming your goodwill. That difference ends up becoming your goodwill. Are you able to remember? Yes?
Yes, sir.
So you will have to eliminate that goodwill also. You will have to eliminate that goodwill also. Basically, whatever is there, you will have to eliminate. जो भी पुराने तरीके का चीज है, you will have to eliminate it. Okay, just give me a minute. All right, fine. Okay, so Tata Sons 5% JV. So we de-recognize or de-recognize all the proportionate assets and liabilities that we had accounted. All right. So that is the basis for doing the transition. That's the basis for doing the transition. Okay. All right. So now let us look at one of the questions. Okay. XYZ is a company registered under the Companies Act following accounting standards notified under the Companies Accounting Standard Rules 2006. The company has decided to voluntarily adopt Ind AS with effect from 1st April X2 with a transition date of 1st April X1. The company has one wholly owned subsidiary and one joint venture, which is into the manufacturing of automobile spare parts. The consolidated financials are as under: share capital, reserves, long-term borrowings, provisions, other long-term liabilities, trade payable, short-term provisions, PPE, goodwill on consolidation of subsidiary and JV, investment property, long-term loans and advances, trade receivables, investments, and other current assets. The company has entered into a joint arrangement by acquiring 50% of the equity shares of ABC Private Limited. Presently, the same is accounted as per proportionate consolidated method. The proportionate share of net assets and liabilities of ABC Private Limited included in the consolidated financial statements of XYZ is as under. So these are the assets and liabilities. The investment is in the nature of joint venture as per Ind AS 111. Okay. Suggest the accounting adjustments which are required to be made in the opening balance sheet as on 1st April 20X1. Okay. So, all right. Now, let us try to get this working. Okay. Slight one or two assumptions are there. We'll try to understand those assumptions and then we will do the accounting. Okay. We will do the accounting. Now, first of all, we are transitioning from AS to Ind AS. So in this AS to Ind AS transition, do you think these amounts should come or they should be derecognized?
Derecognized.
They should be derecognized. That's right. Okay. Now,
Including good,
Mhm.
including goodwill also.
Including goodwill also. Including goodwill also. Now, property, plant and equipment, long-term loans and advances, trade receivables, other current assets, trade payables, short-term provisions. So all these items are there. You have some assets, you have these two liabilities also. Do you have goodwill here? Do you have goodwill here?
Yes.
कहाँ लिखा है इस टेबल में?
सर गुडविल ऑन कंसोलिडेशन दिया है बैलेंस शीट में.
बैलेंस शीट में दिया है, agreed. But this 1507 goodwill, is it for the subsidiary? Is it for the joint venture or is it for both?
Both.
Both. So ideally, what you should have received? You should have received the split of this goodwill. What is the goodwill pertaining to the subsidiary? What is the goodwill pertaining to the joint venture? Yes or no?
Yes. Relatively लेंगे हम.
हाँ, relatively आप लोगे. वो दिया नहीं है. So you have to do a proportionate working. You will have to do a proportionate working. So if we look at the proportion calculation, how the institute has done, it is doing something like this. Okay. So this is question number 5, na?
Yes, sir.
Yes. So question number 5. Goodwill attributable to joint venture. Attributable to joint venture. So total goodwill multiplied by proportionate net assets of joint venture divided by consolidated net assets of the group. यही करना पड़ेगा. This is the only way that it is possible. Do you understand this?
Yes, sir.
Yeah, all right. This is equal to total goodwill 1507 multiplied by what is your proportionate net assets here? 1200, 405, 280, 50, minus 75, minus 35. Yes or no?
Yes, sir.
1200 plus 405 plus 280, 50. Minus 75 minus 30 divided by. Acha. We are doing as on the date of transition. So date of transition is 1st April X1. So don't take this balance sheet. You will be taking this balance sheet. Is it okay?
Yes, sir.
Yes, sir. So कैसे कर रहा है? 22,288 plus 1507 goodwill plus 52456350. That's 1818. अच्छा, investment property नहीं आएगा because it is not having any share in the investment property. Okay, so 5245 will not come. Plus 6350 plus 1818 104 minus 8455 475. So इसको आप करोगे so this comes to how much? 190. ठीक है? Yes?
Yes, sir.
सर 118 पॉइंट समथिंग है तो 119. हाँ.
हाँ, ठीक है. This is the assumption that the institute has done. I think there is nothing wrong in this assumption. Okay, this is fine. In absence of information, we have to do it in this particular manner. But there is one point which is slightly debatable. Okay. ये वाला. Okay. Some people say 1507 should be there in the denominator because it is the total net assets of the group as a whole. But actually, when you are allocating 1507, that itself cannot come in the denominator. Okay?
Yes, sir.
So there are two views to this. Institute has said we are allocating everything, so we put in the goodwill also. So that is the conclusion that is there. This one point is slightly debatable. Okay, we can argue on both sides of the coin. Okay, 1507 pertains to the group as a whole, out of which even the joint venture has its share. So that is why it's put in the denominator. But other people can say that 1507 is what is getting allocated, so it should not come. Anyways, amount is small, so ठीक है. Okay, so 119 is what is going to come as your allocation. So when you are going to pass the entry, you will ultimately end up passing the entry. What will be your entry? You will pass the entry for transition. You need to bring in investment in joint venture. What is your joint venture's name? The company has entered into joint venture by accounting 50% shares of ABC. Investment in ABC debit. Trade payables you will proportionately de-recognize. Short-term provisions you will proportionately de-recognize to goodwill 119, to property, plant and equipment 1200, to long-term loans and advances 405, to trade receivables 280, to other current assets 50. So when you do this, what will be your balancing figure?
1944.
1944. That is nothing but the value of your investment in the joint venture. That is nothing but the value of your investment in the joint venture. Okay. Yes.
Yes, sir.
So when you are going to restate your balance sheet on 1st April 20x1, you will be restating this balance sheet. Okay. You will have to subtract 1200. You will have to subtract 405, 280, 50. All these items have to be subtracted. And trade payables also 75 and 35 you will be subtracting, and introduce a new line item, investment in ABC. Introduce a new line item, investment in ABC. Are we able to understand? Yes, that should give you the balance sheet on the date of transition. That should give you the balance sheet on the date of transition. Any doubts so far? Bolo yaar.
No, sir.
No doubts? All clear? Shall we proceed further then?
Yes, sir.
Are you able to understand the standard?
Yes, sir.
Yes,
Yes.
sir.
समझ में आ रहा है ना कि भाई कुछ बोल रहा हूँ बस सुन रहे हैं, right? You are able to connect the dots with whatever you have studied?
Yes, sir.
All right.
Yes, sir.
बस. Connecting the dots is important. That's the only thing that's there. Okay. Now, let's pick up one more question. H Limited has the following assets and liabilities as at 31st March 20x1 prepared in line with the previous gap. Property, plant and equipment, investments in S Limited, trade receivables, advance for purchase of inventory, cash, total assets, VAT deferral loan, creditor, short-term borrowing, provisions, total liabilities. Share capital 1.3 crores, reserves 2,99,000, cumulative translation difference 1 lakh, ESOP reserve 20,000, retained earnings 1,79,000. That gives you the split of the total equity. So total equity and liabilities is matching to your assets. Okay. All right. The following gap differences were identified by the company on the first time adoption of Ind AS with effect from 1st April 20X1. In relation to property, plant, equipment, the following adjustments were identified. PPE comprises of land held for capital appreciation purposes, costing 4,50,000, and the same was classified as investment property as per Ind AS 40. Exchange differences of 1 lakh were capitalized to depreciable property, plant, and equipment, on which accumulated depreciation of 40,000 was recognized. There were no asset retirement obligations. That means your decommissioning and site restoration liabilities are not there. The management intends to adopt the deemed cost exemption for using the previous gap carrying values as deemed cost at the date of transition for PPE and investment property. You can do that. The company had made an investment in S Limited, a subsidiary of H, for 48 lakhs that carries a fair value of 68 lakhs. Company intends to recognize the investments at its fair value as at the date of transition. VAT deferral loan of 60 lakhs was obtained on 31st March for setting up a business in a backward region with a condition to create defined targets for employment of local population. The loan does not carry any interest and is repayable in full at the end of 5 years. In line with Ind AS 109, the discount factor on the loan is to be taken as 10%, being the incremental borrowing rate. Accordingly, the fair value of the loan is 37,25,528. So nicely, they have given the fair value also. The entity chooses to exercise the option given in para B11 of 101. That is, entity chooses to apply the requirement of 109 and Ind AS 20 retrospectively as required information had been obtained at the time of initially accounting for the VAT deferral loan. The retained earnings consists of the following. Company had granted 1,000 options to employees, out of which 800 have already vested. Company followed an intrinsic value method for recognition of ESOP charge and recognized 12,000 towards vested options and 8,000 over a period of time as ESOP charge and a corresponding reserve. If fair value method had been followed in line with Ind AS 102, charge would have been 15,000 and 9,000 for the vested and unvested shares respectively. Company intends to avail Ind AS 101 exemption for share-based payments for not restating the ESOP charge as per previous cap for unvested for the vested options. Cumulative translation difference. The company had a non-integral foreign branch in accordance with AS 11 and had recognized a balance of 1 lakh as part of the reserves. On first-time adoption of Ind AS, the company intends to avail Ind AS 101 exemption of resetting the cumulative translation difference to 0. Prepare transition date Ind AS balance sheet of Company H, showing adjustments to the values of assets and liabilities. All right, fine. So that takes care of the question. समझ में आ गया question अपने को? Yes? Did you understand?
सर पूरा नहीं, पार्ट में
पूरा?
नहीं आया, पार्ट में समझ में आया।
अच्छा, पूरा समझ में नहीं आया, थोड़ा आया?
यस सर।
ठीक है, तो थोड़ा थोड़ा करेंगे, पूरा समझ में आ जाएगा. ओके, ऑल राइट. सबसे पहले लेट अस स्टार्ट. It's nothing which is rocket science. Okay, all of it is very simple. You just need to put two things in mind: value as per accounting standard, value as per Ind AS, adjustment, Ind AS value. ये चार कॉलम बनाओ. Go on giving the effects to the adjustments. You will arrive at Ind AS transition value. जो डिफरेंस है, that adjustment would typically go to retained earnings. बस यही करना है और आगे कुछ भी नहीं करना. Okay, so let us try to understand. अच्छा, पहले PPE comprises land held for capital appreciation purposes costing 4,50,000 and was classified as investment property as per Ind AS 40. Investment property, was there a standard under accounting standards?
No, it was in PPE taken.
It was in PPE. It was in PPE. Okay. Now, if it was in PPE, then tell me one thing. This adjustment, should I remove it from PPE and put it in investment property?
Yes, sir.
Yes.
Yes.
तो ये कौन सा एडजस्टमेंट होगा? डी रिकॉग्निशन, रिकॉग्निशन, रिक्लासिफिकेशन और रीमेजरमेंट?
Reclassification.
बस कुछ भी नहीं है उसमें, दिमाग मत लगाओ. दिस इज क्वेश्चन नंबर, कौन सा है ये? इलस्ट्रेशन 16. ओके. जर्नल एंट्रीज नहीं, जर्नल एंट्रीज मत करो. यू कैन जस्ट गिव द हेडिंग ट्रांजिशन एडजस्टमेंट. फर्स्ट वन, इन्वेस्टमेंट प्रॉपर्टी डेबिट 4,50,000 to प्रॉपर्टी प्लांट इक्विपमेंट. हो गया? डन. नेक्स्ट, this adjustment is done. Now, exchange differences of 1 lakh was capitalized to depreciable property, plant and equipment. That means this is para 46, 46A. याद है?
Yes, sir.
कल बहुत कठिन परिस्थितियों में आपने ये एडजस्टमेंट समझा था. Yes?
Yes, sir.
So do you remember, girls?
Yes.
All
Yes.
right. So para 46, 46A, under that in AS 11, they had taken the irrevocable choice to capitalize this into your asset. And on this, there was a depreciation of 40,000. Okay. Now, the management intends to adopt deemed cost exemption for using previous GAAP carrying value. Can it do that? बोलो यार.
Yes, sir.
It can do that. वो वही कर रहा है, intends to adopt the deemed cost exemption for using the previous GAAP carrying values as deemed cost at the date of transition. So will there be any adjustment entry for this?
No, sir.
No, sir.
नहीं होगा. No adjustment entry. जो remaining property plant equipment है, on as is value basis it will move into Ind AS. ठीक है? So you have property plant equipment appearing at 134,50,000. यहाँ से आप 450 you will remove. So therefore it will appear at 1 crore 30 lakhs. It will therefore appear at 1 crore 30 lakhs. Are we able to follow?
Yes, sir.
Yes,
Follow.
sir.
So that takes care of this adjustment. Okay. Next, no entry required. So JV is passed. No entry. No entry. No asset retirement obligations. So no entry here also. All right. Now, company had made an investment in S Limited for 48 lakhs, which carries a fair value of 68 lakhs. Company intends to recognize the investment at its fair value as at the date of transition. Can it do it?
Yes, sir.
Yes, sir.
Yes. So let us do it. 48 is becoming 68. So investment in subsidiary, debit 20 lakhs to retained earnings 20 lakhs. Are we able to follow?
Yes, sir.
बहुत बहुत मतलब सदियों पहले हमने इंडेस 20 पढ़ा था। यस। तो इंडेस 20 में देर वॉज समथिंग नोन एज low rate of interest loans or concessional rate of interest loans. Yes, or in this case, there is no interest only. Whatever be the situation, Ind AS 20 read with Ind AS 109 told you that you have to do the accounting for the loan at fair value. So at fair value means a 60 lakh loan which is interest free. The present value of that is 37 lakh 25,528. Did you understand?
Yes,
Yes.
sir.
So,
So Ind AS में what will be the value for this loan? Will it be 60 lakhs? Will it be 37 lakhs?
37 lakhs.
It will be 37 lakhs. Yes or no?
Yes, sir.
Yes,
So
sir.
VAT deferral loan debit 60 lakhs. Two. VAT deferral loan fair value 37, 25, 528. Where will the balancing figure go?
Grant, sir.
Yes, 2274, 472. This balancing figure is nothing but your grant. कौन सा grant? It is for 5 years. It is for 5 years. So deferred grant. So it becomes a deferred grant. So it becomes a deferred grant. Are we able to understand? Yes.
Yes, sir.
Ideally, defer over 5 years. Defer over 5 years. ठीक है? So that is done. So this adjustment is taken care of. Yes. बोलो यार.
Yes, sir.
All right. Monica, Ginny, Pooja.
Yes, sir. Yes,
Yes,
sir.
sir, clear.
yes, sir.
All right. Now we come on to the next. ESOP reserve of 20,000. Granted options, 1,000 options, out of which 800 are already vested. So unvested is 200. Company follows an intrinsic value method, charge 12,000 towards vested options and 8,000 over a period of time as ESOP charge and a corresponding reserve. Okay, right. So this one, you can definitely help me out with this. Okay. $20,000 for 1,000 options. Vested, non-vested. So vested is 800, non-vested is 200 options. Now, what is your previous gap value? 12,000. The company followed an intrinsic value and recognized 12,000 towards the vested options and 8,000 over a period of time as ESOP charge and a corresponding reserve. Okay. 12,000 towards the vested. So here, previous gap value, which is basically intrinsic value. This is 12,000. This is 12,000. What is the fair value of this? If fair value had to be done, then corresponding charge would have been 15 and 9. So fair value 15,000. Can I continue this fair value? Yes. Option available under Ind AS 101. Option available under Ind AS 101. Are we okay with this? Yes?
Yes, sir.
Yes, sir.
All right. Now, let us move on to the next one. Recognize 12,000 towards vested options, 8,000 over a period of time as ESOP charge and corresponding reserve. So, previous gap 8,000. इसका fair value is also given. $8,000 and $9,000. Option not available. Compulsory restatement. Compulsory.
1,000 का रेफरेंस प्रोवाइड कर सर 1,000 का रेफरेंस प्रोवाइड कर देंगे
Yes. यहाँ पे in the first case vested, you can take the previous carrying amount of 12,000 and close the matter. But in the second case of non-vested options, you cannot take 8,000. You will have to do a restatement. So entry will be retained earnings debit 1,000 to ESOP reserve 1,000. Are we able to understand? Yes?
Yes.
Yes?
सर
समझ में आ गया अपने को?
Yes, sir.
The company intends to avail 101 exemption for not restating the ESOP charge as per previous gap for vested options. This line shows that they do not wish to extend it to the next. Okay, they do not wish to do adjustment to that value. They will carry it forward straight away. But on the non-vested option, 1,000 impact is required to be taken. Anybody has any doubt so far?
नो सर
Clear हो गया? अच्छा. Last, the company had a non-integral foreign branch in line with AS11 and has recognized a balance of 1 lakh as part of reserves. This is your FCTR. On first time adoption of Ind AS, the company intends to avail Ind AS 101 exemption of resetting the cumulative translation difference to 0. तो इसमें क्या करना है? इसमें you just have to make it 0.
जीरो कर
So,
देंगे
yes, so FCTR debit
टू
1 lakh.
एंडिंग
ठीक है. ये कौन से एंगल से डिफिकल्ट था? पढ़े? प्लग द वैल्यूज, स्टोरी इज ओवर. ओके, ऑलराइट. So I think many times it's not the question that is troublesome, it's the fear of the question that is troublesome, right?
length of the question is troublesome. The all adjustment in a one question.
ठीक है. So that's it. So with these adjustments, can you draft the balance sheet on transition?
Yes, sir.
आपके दो इफेक्ट मैंने दे दिए, आपको सिर्फ प्लग इन करो, प्रिपेयर द बैलेंस शीट. सो दिस क्वेश्चन इज डन फॉर यू. ओके, ऑलराइट, फाइन. नाउ 9 बज गए. अच्छा, एक दो चीजें और करेंगे, देन वी टेक अ ब्रेक and then we do one question. We'll try to do one question that is there and then we shall wind up. Okay.
Sir, this is the last class.
नहीं है ना, सैटरडे संडे Also, we have a session. I think today you should be getting your schedule. Saturday, Sunday, we will be doing analysis of financial statements. And Tuesday, we should be doing professional ethics. For another 3 classes, you have to bear with me. Okay? All
Not,
right.
sir. We will not bear. We will enjoy, sir.
ठीक है ऑल
ओके
राइट ठीक है और एनीवेज
सर एक्चुअली हमारे पास टाइम टेबल आया
हाँ
है तो
हाँ अभी
उसमें
मुझे आई मीन दे अपलोड इट टुडे
अपडेट
हाँ
आज
हाँ
मतलब
यस
मुझे पता चला बिकॉज आई वाज आल्सो सीइंग द शेड्यूल वेदर इट इज अपडेटेड और नॉट आज आ जाएगा
ओके
बस आपका खत्म ही हो गया लगभग अकाउंट्स तो एफआर तो खत्म ही हो गया या
सर ऑल सब्जेक्ट ऑलमोस्ट मतलब फर्स्ट ग्रुप के तो ऑल सब्जेक्ट ऑलमोस्ट होने आ गए हैं
ओ क्वाइट कंफर्टेबल मे एग्जाम मतलब जैन में दे द पोर्शन इज कंप्लीट दैट्स नाइस मैक्सिमम फेब फर्स्ट वीक वेरी गुड बहुत सारा टाइम है पढ़ने के लिए ओके all right fine so now we saw the treatment in the case of government grants okay we take the loan at fair value differential we will be taking it to government grant it could go to P&L or it could go to deferred government grant depending on the nature of the grant or to property plant equipment if it is for acquisition of an asset whatever be the treatment the adjustment will go there okay all right if 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 the rate of interest is given if the rate of interest is given market rate of interest then segregation of loan between the fair value and the deferred government grant or government grant has to be mandatorily done if that is not given previous gap value can be taken okay and finally coming to accounting estimates acha accounting estimates we cannot take the benefit of hindsight. We cannot take the benefit of hindsight. Okay. So इसका मतलब क्या है? Let us understand with the help of an example. Accounting estimate. Okay. Example. Let us understand bad debts provision. See, transition year 2017-18. So date of transition क्या होगा 1/4/2016. Estimate for bad debts is made on 31st March 2016. Now, suppose I had made the provision of 2 lakhs on 31st March 2016. I am transitioning from 17-18. So I have to prepare a comparative P&L of 16-17 also. Yes or no?
Yes,
Bolo?
sir.
Abhi, you made a provision of 2 lakhs. And after that, you are coming 2 years. 2017-18 में आप हो. And 2017-18 when you are going to do the financials, you will be preparing 2016-17 financials also. Correct? So, today's date, you will have certain information about items which were existing on the date of transition. है कि नहीं? For example, this 2 lakh was made for a particular estimate. It was made for a particular estimate. But today's date in 2017-18 आपको पता चल रहा है कि आपका actual estimate 2 lakh नहीं है. The debt that has gone bad is actually let us suppose 5 lakh 50, is actually let us suppose 5 lakh 50,000. Sitting on 17-18, you came to know that 5 lakh 50,000 became bad in 16-17. Yes? Are you able to understand the question or the scenario?
Yes,
Yes,
sir.
sir.
Yes. So let us put it on a timeline. Thirty-first March 16. Provision 2 lakhs. Okay. Now, this is 2016-17, 2017-18. So here I am applying Ind AS. So this Ind AS transition will happen from 1st April 2016. So in this period, will I have certain information about certain balances that existed on 1st April 16? Answer is yes. Answer is yes. You will have that information. So for instance, this provision of 2 lakhs. You now come to know in this year that actually not only 2 lakhs, another 3.5 lakh has gone bad. So it should become 5,50,000. So now, what will you do? Will you, at the time of transition, take the provision for bad debts as 2 lakhs or will you restate it to 5,50,000?
Restate to 5,50,000, sir.
Okay. What about girls? Monica, Pooja, Ginny?
Sir, can
Sir,
you ask the question again?
Acha. You were closing the books on 31st March 2016. उस टाइम पे you made a provision for bad debts 2 lakhs. 16-17 बीत गया, 17-18 में आप आ गए. 17-18 में you thought I will you move to Ind AS. So you are going back in time 1/4/2016 से you have to do a restatement. Now in 2017-18, 16-17, 17-18, you came to know one additional information. Kya? That my actual bad debt is not 2 lakhs, it is 3,50,000. That means there is my actual bad debt is not 2 lakhs, it is 5,50,000. That means there is an additional bad debt charge of 3,50,000. My question to you is, on 1st April 2016, that is the date of transition, what will be the value of provision for doubtful debts?
Restated value.
Will it be 2 lakhs or will it be 5.5 lakhs?
5.5.
5.5, sir.
Okay. So everybody unanimously said it is 5.5 lakh and everybody is not right. Okay. Because 2 lakh से 5.5 lakh जो change हुआ है, is that change happening because of transition or is it because of an event that has happened?
No, sir.
Event that
It is
happened.
because of an event that has happened. Aapka customer is unable to file. He filed for bankruptcy. So what is the role of Ind AS in this? Remember, if you take 2 lakh and restate it to 5,50,000, उसका impact कहाँ पे जाएगा?
P&L में.
P&L में नहीं जाएगा, retained earnings में जाएगा, because you are
हाँ,
taking a transition adjustment.
Yes, sir.
But is this 2 lakh to 5,50,000 movement something related to transition? Answer is no.
No.
It is something that has happened because of a business event. So this cannot come in your transition. This should hit your P&L. This should hit your P&L. And therefore, 2 lakh will be the opening value of provision. 3.5 lakhs will hit the P&L in the restated financials of 2016-17. Are you able to understand?
Yes, sir.
Yes, sir.
Yes?
Yes, sir.
So in accounting estimate, the key rule is no benefit of hindsight to be taken. Estimate kiya. Then we got certain additional information about that estimate, which makes it go high or low. I cannot do the adjustment in the transition. It will come subsequently. It will hit the P&L. It should hit the P&L. Okay? All right. So that's all the key points that we had to cover. We'll do a couple of questions after the break and then we shall resume. Okay. I think almost all parts are covered. We'll do some adjustments after the break and then we shall wind up. Okay. All right then. Thanks. Yeah. Take a small break of 5 minutes. We shall start at 9:15. Yeah. Okay. So now let us come back to some of the questions. Okay. So 16 is done. Okay. Now, illustration 17, quite an important question. Okay. All right. So now let us quickly run through this. Of course, you will be preparing the balance sheet. We will only be discussing the transition adjustments, whatever is there. How do we treat that? Okay. Shaurya Limited is the company having its registered office and corporate office at New Delhi. 60% of the shares are held by the government of India and rest by other investors. This is the first time that Shaurya Limited would be applying Ind AS for the preparation of its financials for the current financial year 1920. The following balance sheet is prepared as per earlier gap as at the beginning of the preceding period, along with additional information. We have share capital, reserves and surplus, long-term borrowings, provisions and deferred tax liabilities, trade payables, other current liabilities, short-term provisions. Total assets. You have non-current assets, current assets, receivables, cash and bank and other current assets. Additional information, other current liabilities include 3,90,000 liabilities to be paid in cash, such as expenses payable, salary payable, and 60,000 are statutory government dues. Okay. Long-term loans and advances include 40,000 loan. The remaining consists of advance to staff of 1,10,000. Other non-current assets consist of capital advances to suppliers. Other current assets include 3,50,000 current assets receivable in cash and prepaid expenses of 50,000. Short-term provisions include a dividend payable of 2 lakhs. The dividend payable had been as a result of board meeting wherein the declaration of dividend for financial year 17-18 was made. However, it is subjected to the approval of shareholders in the general meeting. Okay. All right. Tell me, ये सब चीजें क्यों दिया है? Yes. Why is all this data given to you? First 4 items. Other current liabilities includes payable in cash. Long-term loans and advances includes 40,000 loan and advance to staff. Other non-current assets is at capital advance to suppliers. Other current assets includes receivable in cash and prepaid expenses of 50. ये सब क्यों दिया है?
Just confusing the
बाबा confusing नहीं है. I have marked something for you. What is this?
Financial liability and assets.
Financial liabilities and financial assets. So they have put everything in other current liabilities or other current assets or other non-current assets. We need to shift it from there and classify as financial liabilities and financial assets. So this is your reclass adjustments. This is your reclassification adjustments. Are we okay with this?
yes, sir.
Yes. All right. Okay. Next. Short-term provisions include dividend payable of 2 lakhs. Dividend payable has been as a result of the board meeting wherein the declaration, okay, so here uh, the declaration of dividend was made for 17-18. So it is subjected to approval of shareholders in the AGM. So tell me, can I book a provision when the obligating event has not yet happened?
No.
No. So this is a reversal. Obligating event is shareholders giving the approval. Directors declaring the dividend, you cannot make a provision based on that. Okay. So, and of course, this is now no longer possible because we have an amendment in AS4 as well. Okay. But it is there for you. So you have to reverse this. Chief Financial Officer of Shaurya Limited has also presented the following information against corresponding relevant items in the balance sheet. PPE consists of a class of assets as office buildings whose carrying amount is 10 lakhs. However, the fair value of the said building as on the date of transition is estimated to be 15 lakhs. Company wants to follow the revaluation model as its accounting policy in respect of its property, plant and equipment for the first annual Ind AS financial statements. Okay. Now, PPE 10 lakhs to 15 lakhs, and it wants to follow the revaluation model. Two things are happening. One is a transition and one is change in the model. So 10 lakh to 15 lakhs. Will this be a transition impact or will this be a revaluation impact?
Revaluation.
Think and answer. Will this be a transition impact or will this be a revaluation impact?
So this is a transition.
This will be a transition impact. Okay. All right. So you can take it as transition impact and book it under retained earnings. Okay. So this is your remeasurement. 10 lakhs, you will make it 15. So increase by 5 lakhs and take it to retained earnings. Take it to retained earnings. All right. Some cases, the institute has taken it to revaluation reserve also. That is also not wrong because here the company is talking about changing the policy itself. Okay, so they will move it into the revaluation model. So in that case, even taking it into revaluation reserve appears to be correct. Inconsistency here, but both do make sense. Okay, all right. Now, the fair value of intangible assets as on the date of transition is estimated to be 2,50,000. However, the company is reluctant to incorporate the fair value changes in the books of account. Yes. What is it?
Sir,
The
this need
management is reluctant. So intangible assets की बात हो रही. If management is reluctant, we will not do the fair value adjustment. We will continue with previous cap value. Revaluation is mandatory, not necessary. Okay? Because this is intangible assets. Okay? Acha. Shaurya had acquired 80% shares in a company, Excel Private Limited, few years ago, thereby acquiring control upon it. Shaurya recognized goodwill as per erstwhile accounting standards by accounting excess of consideration paid over the net assets acquired at the date of acquisition. Fair value exercise was not done at the time of acquisition. So now, what are you going to do? Continue previous gap value. Restatement. If you want to do a restatement, what is required?
So valuations will be required
That
as
data
of
is
date
not
of
given.
acquisition.
If
Yes.
restate data not given in the question. So they want you to follow the previous gap value, which is okay, which is fine. Okay, it is fine. All right. Trade receivables include an amount of 20,000 as provision for doubtful debts, measured in line with previous gap. As per latest estimates using hindsights, the provision needs to be revised to 25,000. Will you do this adjustment?
yes, sir, we need
No.
to do 20,000
Using
only.
hindsights,
Yeah.
No, sir.
you will not do. वही वाला कहानी है जो मैंने बोला 2 lakh becoming 5.5 lakh because of additional information you came to know later. You will not revise that estimate. Okay, you will not revise that estimate. Okay. provision will not be
Revised.
restated as it is due to hindsight. Gyanendra, did you follow?
Yes, sir.
All right, as it is due to hindsight. If there is a change in the calculation, all that we can consider, but hindsights we cannot. Okay, all right. Next. Company had given a loan of 1 lakh to an entity for the term of 10 years, 6 years ago. Transaction costs incurred separately for this loan. The loan carries an interest rate of 7%. Principal amount is to be repaid in equal installments over the period of 10 years. Interest is also payable at each year end. The fair value of loan as on the date of transition is 50,000 as against the carrying amount, which presently is 40,000. However, Ind AS 109 mandates to recognize the interest income as per the effective interest method after the adjustment of transaction cost. Management says it is tedious in the given case to apply EIR changes with retrospective effect and hence is reluctant to apply the same retrospectively in the first time provision, in the first time adoption. Okay. What do you think?
10,000 की जो एडजस्टमेंट करनी पड़ेगी टू द रिटेन अर्निंग.
Yes. 10,000 की adjustment करनी पड़ेगी. You have to do the adjustment of 10,000. Management says it is a tedious task. There is no option. There is no option in this case. Okay. Because you are giving an explicit statement that you have complied with all the Ind ASs. That is why you have to comply. You have to take the fair value of 50,000. You have to take the fair value of kitna hai? As against, yeah, company had given a loan. So this is an asset. Okay, so a loan account will increase by 10,000 and retained earnings also will increase by 10,000. So remeasurement. You cannot take the previous cap value. Remeasurement karo, move ahead. Okay, next. In the long-term borrowings, 4,50,000 of the component is due towards the state government. Interest is payable on the government loan at 4%. However, the prevailing rate in the market at present is 8%. The fair market value of the loan stands at 4,20,000. Stands at 4,20,000 in this case. So what are you going to do? बोलो.
सब बेनिफिट को ग्रांट दिखाना पड़ेगा.
Okay.
और 109 के हिसाब से लायबिलिटी का कैरिंग अमाउंट दिया जाएगा.
Previous gap value. So this is note number F. This is note number. This is adjustment number F. Okay. Fine. Let us look at this adjustment again. In the long-term borrowings, 450K of component is due towards the state government. Interest is payable on the government loan at 4% and the prevailing rate in the market at present is 8%. Okay. The loan from government can be restated if the initial date value is available. Initial date matlab when the loan was taken. Because if you see, we always calculate the fair value of the loan starting right from the initial date when it is available. That is not available. And therefore, in this case, what they have given, the fair market value of 4,20,000 as on the relevant date. Have they given the fair value on the initial date? Answer is no. This
No.
relevant date, not initial date. Hence, previous
4,50,000. हाँ.
previous gap value. Data is not there. That is why we are not taking the fair value. Data hota, we would definitely have taken that previous gap value. I mean, we would definitely have taken that fair value and booked the balance in government grant. But if that is not there, then you will have to take the option. Okay. All right. You will have to take the previous gap value. All right. G. Under previous cap, mutual funds were measured at cost or market value, whichever is less. Under Ind AS, company has designated these investments as FVTPL. The value of mutual funds is 2 lakhs included in current investment. Fair value is 30,000. What are you going to do? Come on. What are you
Remeasurement.
going to do? Will you restate 2 lakh to 2 lakh 30,000?
Yes, sir.
Yes.
Yes.
Definitely. Because you have the fair value on the date of transition, you have the carrying amount. So the difference you will take it to retained earnings. So remeasurement. Ignore separate calculation of deferred tax on the above adjustments. The cumulative deferred tax income to be recorded is 50,000 on account of these adjustments. So you will be recording deferred tax asset होगा, but just look at the question. Existing DTA है या DTL है? Is anything given in the question?
DTL, sir. Deferred tax liability. 3 lakh.
Deferred tax liability है, so you debit the deferred tax liability and credit the deferred tax income. Okay? So liabilities will go down. You need not create a separate DTL. Okay, so this will be DTL account debit to retained earnings. 50,000. Are we okay with this?
Yes, sir.
Yes,
Yes,
sir.
so that takes care of H also. So prepare a transition date balance sheet. हो जाएगा. Explanation I have already given. Okay. अच्छा. When you look at this one, again, that
Yes.
company had given a loan of 1 lakh. Fair value on the date of transition is 50,000. Carrying amount is 40. Ideally, I should go back in time when the loan was initially taken. And when I take that initial loan, then I do the amortization table, arrive at the value on date of transition, and then I do it. Management says it is tedious. Ideally, it cannot. But we are not having the data. That is why we are sticking to the fair value on the date of transition. Okay. Remeasurement as data not available. Else restate from initial date. Restate from initial date. Are you able to understand? Yes? Did you follow everyone?
Yes, sir.
Yes. This is not the regular restatement. The regular restatement is initial date fair value, amortization table, arrive at date of transition value, and then do a restatement. ये वैसा वाला नहीं है. They have not done this working. ये working करने के लिए data is not available with us, and therefore we take fair value on date of transition, carrying value on date of transition, and we do the adjustment. So that is all that is there in this particular question, Shaurya Limited. Very important question. Okay. Please try this. Please try this. Okay. All right. Right. Next. A bit. Yeah. So that is done. Mhm. Mhm. Okay. All right. Perfect. Okay. So that's it on the standard per se. We have no major issues that are pending in this. This is a huge question. You can do this by yourself. I've done everything. Nothing is left out in this question. Okay. Only those notes you can read. It's exactly what I have discussed. Okay. All right. Now, all right. Foreign currency loan we have discussed. Carve outs we have discussed. Okay. We have done quite a bit of questions. This question also we have done number 5. Okay. Yeah. All right. Question number 6. Try it out. It's just adjustments that are there. Okay, fine. We can immediately do it up. It's not a big deal. Okay. Mathur India has to present its first financials under Ind AS for the year ended 31st March 20x3. The transition date is 1st April 20x1. The following adjustments were made upon transition. Company opted to fair value its land on the date of transition. Fair value of land is 10 crores. The carrying amount was 4.5. You will remeasure. Entry will be land account debit to retained earnings 5.5 crores. The company has recognized a provision for proposed dividend of 60 lakhs and related distribution tax of 18 lakhs during the year ended 31st March X1. It was written back as on the opening balance sheet date. Okay. Now, can I keep it? Answer is no. You will have to write it back. Okay, it was written back. So therefore, proposed dividend account debit to retained earnings 0.78, de-recognized. Company fair values its investment in equity shares on the date of transition increases 75 lakhs. So investment in equity shares 75 lakh debit, credit retained earnings. Simple. Company has an equity share capital of 80 crores and redeemable preference share capital of 25 crores. Redeemable preference share capital has to be reclassified. So preference share capital equity debit 25 crores to preference share capital liability 25 crores. We are just doing a reclass. Reserves and surplus before transition to Ind AS was 95 crores, representing 40 crore general reserve, 5 crores of capital reserve out of business combination. Balance is surplus in the retained earnings. Company identified that the preference shares were in the nature of financial liabilities. Reading the question, we could only make out. What is the balance of total equity on 1st April after transitioning to Ind AS? You have all the adjustments. Just do the add list, you will arrive at the value of other equity and show the reconciliation between total equity as per AS and as per Ind AS to be presented in the opening balance sheet on 1st April 20x1. Ignore your deferred tax impact. Are we okay with this?
Yes, sir.
Yes?
Yes,
Okay.
sir.
Nothing special that is there. Okay. All right. Now,
I just want to one question. If they now written ignore deferred tax impact, we need to provide any deferred tax impact or not, sir, in question?
see,
If written.
many times question will say ignore. The very first thing you have to remember is if deferred tax needs to be provided, they should give tax rate in the
Okay.
question. You cannot assume a tax rate. So if question does not give a tax rate, you are saved. There is no need to do a deferred tax adjustment. Ideally, if tax rate is given, please do deferred tax adjustments also. Please do but then you need to be given the tax base. Yeah, you need to be given the tax base. You have the Ind AS values. Only then you can calculate the deferred tax. ये data है नहीं, then you cannot calculate
Yes,
the
sir.
deferred.
Thank you.
Are we okay with this?
Yes, sir.
Yes. ठीक है. So quite a bit we have covered. There are some questions which have come in your RTPs. You can choose to go with them. Okay, just have a look at that. We have given to the exemptions, exceptions, presentations, disclosures. Yep. Oh, that's it from my side. I don't have anything additional to cover in this. Okay, exemptions. All right, fine. ठीक है. So that's done. Perfect. Okay, okay, okay. All right. Anybody has any doubts so far?
सर
No.
डाउट तो नहीं है, बट अगर आपको पॉसिबल हो सके तो एक ही सिंगल चार्ट में ये जितने भी आइटम्स हमने डिस्कस किए उसकी ट्रीटमेंट्स दे सकेंगे ट्रांजिशन रेट पे, उससे हमारे चैप्टर की रिवीजन भी हो जाएगी सर।
मैं ये शीट आपको दे देता हूँ. इसमें you are having all the discussions that we had, right? We started off with ESOPs. ESOPs का adjustments है. Forex adjustments I have given to you, right? And then property, plant, equipment I have given. Business combinations also I have given. I will mark it to you what all are the adjustments. Okay. So what are all the transition adjustments? Okay.
ओके सर।
Transition impact. Then Forex के केस में this is your transition impact. Because that chart will become too cumbersome. बहुत बड़ा हो जाएगा वो. Transition impact. Third.
सर बिजनेस कॉम्बिनेशन।
Yes, ये वाला transition impact. Business combination. Next we started off with CFI में there is no transition impact. मतलब it's just a solvable question. उसमें chart वगैरह नहीं है. Okay. Joint venture also there is no separate chart as such. It's purely computational. Okay. And then what we saw, seventh accounting estimate, no benefit of hindsight is to be taken. So transition impacts, गिन चुन के we have done 6 to 7 transition impacts. That's it. Rest is all, most of it is pure logic, what we have applied. Okay. All right. Anything else? To ask? Yep. Thanks, everyone. Thank you. Okay, there was one question that was asked. In the joint venture, we had more of net assets, that is positive. But net assets, if it becomes negative, what happens? If net assets becomes negative, see, एक तो वो होगा नहीं. You cannot have a negative net asset unless there is a capital reserve. So you should be given the information about capital reserve on the acquisition of joint assets. If that is not given, it means your net assets and your consideration that you have paid is more for that. Okay. And anyways, whether it becomes negative or positive, ultimately the adjustment goes through in the respective eliminations from the total assets that you had. So it really won't make any difference. Okay. All right. So that's it from my side. All right. So no doubt. So we can call a closure on this chapter. Okay. All right. Fine. Perfect. ठीक है. Anything else? Nothing. We can call it a closure. Let's call it a day. We can resume on Saturday. Saturday, we will be discussing analysis of financial statements. Okay. Something which is quite simple and logical. No more IND ASs. आपके IND ASs complete हो गए. Yes. All right. Fine. ठीक है then. Let's convene on Saturday. Session is concluded. Thanks everyone.
थैंक यू
Thank
सर।
you.
थैंक यू
Thank you.
सर।
Thank you.
Thank you, sir.
Thank you. Thanks. Thanks.